Ting, thanks for joining us. Right, of course, we're going to be talking about China. That's a big story of the day. There's a rate hike coming through. Surprise as ever. Is it enough?
Well, it's not enough yet because China's inflation rate will be about 4% in the next couple of years, so which means now the one-year deposit rate is still 3.5%, 50 basis points below the 4% inflation. So I believe there will be 2 more hikes at least in the next couple of years.
It's amazing. Most people don't think that, do they? Most people are thinking they're done, or there's at least just one. I think you were saying earlier.
Well, maybe the idea is that perhaps the inflation situation is at least more under control now than it was at the beginning of the year. And the other thing is, look how the markets are reacting. The Shanghai Composite is higher. The Hang Seng Composite is higher. I mean, this is a bit unusual in a sense that if we were to talk about this 24 hours ago, we would have expected the markets to have more of a maybe negative reaction.
Well, the reaction will be positive. Let me explain. I said I expect 2 more rate hikes for next year. I think the chance for us to see another rate hike for the rest of the year is very small. So that's why I think the market now believes that it's over for this year.
Okay.
And the inflation will peak very soon.
So it's a relief rally is what you're saying, yeah?
So that's why we wrote in our report yesterday that the other shoe, finally fell off. Yeah.
Morgan Chase agree with you. They actually believe that the rate cycling has not peaked as yet. And they gave the 50 basis points in the next 18 months, which is what you're saying.
Oh, yes.
The concern is that inflation's coming out next week. Forecast 6.2%, so above 6%. The big question is that the peak, do you think?
Well, I think it's a peak for this year, most likely.
For this year, not for next year?
I think it's also for next year.
So what other areas of the economy are you worried about? Is debt an issue for you? The wage inflation?
Well, for the medium to long term, yes, it's wage inflation. It's also about labor shortage, which will be the most important drag for the Chinese economy in coming years. But in the short to medium term, yes, the low government debt and also the property sector will be the concern for the market.
How big a concern is that? I mean, is it a hard landing? Is it a soft patch? I mean, what do you see the Chinese economy doing in the next 2 years?
Well, I don't expect hard landing. We are strong support of soft landing view, and we expect China's growth will be about 9% in the second half of this year and will be around 9% for next year. But I believe that the hard landing concern or worry will dominate the market for another few months.
We've also got, of course, the RRR, the reserve ratio. Could that be going up further? I mean, we've been practicing, loose fiscal policy, but very tight monetary policy. Is that right?
I mean, there's a huge debate. I mean, they've got $3 trillion in the bank in reserves. I mean, that's one of the big arguments the bulls will obviously use. And also, in addition to that, they potentially could cut rates as well down the road, say a year from now, if the economy really does begin to struggle. They can really begin to sort of loosen the purse strings versus what they've done in the past, which is basically tightened up to this point.
Well, I guessed on earlier, actually, Sachi did that. So saying that $3 trillion odd that they've got in reserves is actually worthless because they can't really liquidate it at the end of the day because they start selling it. They just send the dollar down in a spiral, making it actually worthless currency.
Well, that's right. This FX reserves is almost useless to stimulate the Chinese economy. It could be very useful to stimulate other countries' economy if they use the money to purchase other countries' commodities.
What about the impact of being the biggest holder of U.S. treasuries? I think it's $2 trillion. And if the U.S. economy is also in trouble, debt, etc., and if they do, some are saying quantitative easing 3, how much does it affect that relationship, if you like, of the U.S. Treasury story?
Well,
at all?
I don't think there will be big stories for the U.S. Treasuries in coming months. For China, there's no other solutions, and China will continue to have some trade surplus, and China will have to purchase more U.S. Treasuries. But on the margin, I think the story is not about U.S. Treasury. It's about some of the bonds in Europe, and China will, on the margin, shift some of its wealth to bonds issued by European sovereign issuers.
You know, as we enter this summer season, I mean, let's be honest, the volume is a little bit light. The interest level is debatable at this point. I mean, a lot of portfolio managers that I've spoken to is basically sitting in 30, 40, 50% cash. They're not big net short. They're not big net long. The institutional guys that you're talking to, is that something they're also echoing as well? And at what point during the summer might they perhaps step back into the market and get excited again?
Well, very interesting question. Yes, the market has been talking about when will the market become more confident about, let's say, global growth and China's growth. At this point, I still believe that there's kind of two forces. One 50% of the people believe in hard landing, and another 50% believe in that no hard landing. And I don't see which side will win out.
Do we need a landing?
No landing at all.
Yeah, do we need a landing? We can just go circling and look out for a new runway
there will be a
somewhere.
landing.
I have to get the airline reference in, of course. Yeah.
Well, I think the landing will be there, definitely. That's because, as I just mentioned, there will be slowdown eventually because after 30 years of high double-digit growth in China, now it's time to see single-digit growth because of the labor shortage, because of the demographics, and also because of the high base. So it's inevitable.
Ting Lu, that's all we've got time for. But thanks, Dida, for joining us. Come on again soon.